Stocks cut gains amid more of the coronavirus fear. Stocks cut gains Monday after the Carnival confirmed one of its guests tested positive for for the coronavirus 6 days after leaving the ship. Around midday, the Dow was up 160 points after rising as much as 374 points earlier in the day. The S&P 500 traded about 0.8% higher after rising more than 1%. The Nasdaq remained about more than 1.2% higher. Carnival shares erased earlier gains and traded more than 1% lower on the news. Norwegian Cruise Line followed Carnival by trading lower than 0.9%. The shorter-term uncertainty around the coronavirus is really affecting everything, said J.J. Kinahan, a chief market strategist at TD Ameritrade. You may continue to see sort of a reallocation. Wall Street started off the session on the right foot, recovering a big chunk of its losses from Friday's sell-off, which was sparked by the coronavirus fear. Nike led the Dow higher than with a 4.3 raise after analysts at UBS and J.P. Morgan recommended buying the stock on the coronavirus related weakness. J.P. Morgan called this recent pullback a multi-year buying opportunity. The major averages reached their sessions higher after the Institute for Supply Management said its manufacturing gauge showed activity in the sector expanded. Economists polled by Dow Jones expected a contraction in manufacturing activity for January. The 30-stock Dow was up more than 350 points higher at its high of the day. The death toll in China from the coronavirus reached 361% on Sunday, surpassing that of the SARS virus, which lasted from 2002 to 2003, while the first death outside of China was reported in the Philippines. Worries about how the virus would impact the global economy dented U.S. stocks in the final trading day of January. The Dow dropped 603 points, or more than 2% on Friday. The S&P 500 pulled back about 1.8%, its biggest one-day drop since October. Travel and airline stocks led the way lower for the broader market last week, with among the hardest hit. Airlines such as Delta, United, and American also fell. Investors also increased their exposure last week to Treasury yields and loaded up on protection in the options market. The 10-year Treasury yield fell on Friday to 1.505, pushing the note prices higher. The benchmark rate climbed back to around 1.57% on Monday. The CBOE Volatility Index, widely considered the best fear gauge on Wall Street, jumped to about 18% in January from around 13 to start the month. Stocks in mainland China plummeted overnight in the first session since closing for the Lunar New Year holiday. The Shanghai Composite tanked by 7%. The Shenzhen Index fell about 8%. Japanese stocks also declined Monday, with the Nike 225 pulling back about 1%. Yet U.S. investors are seemingly buying the dip after the S&P 500 and Nasdaq recorded their worst start to a trading year since 2016. We are looking for higher highs in the S&P 500 index once the coronavirus fear subsides, said Mark Chaikin, the CEO of Chaikin Analytics, in a note. Buying opportunities abound in strong sectors and industry groups. But Mohammed El-Erian, chief economic advisor at Allianz, advised investors to hold off on adding equity exposure at this point. The coronavirus is different. It is big. It's going to paralyze China. It's going to cascade into the global economy. El-Erian told CNBC's Squawk Box on Monday we should try and resist our inclination to buy the dip. But yep, I said a lot of the stuff is dropping, like I said.